Now, OPEC Plus, which is an amalgam of oil-producing countries and the world and Russia, have reached an agreement to cut global oil supplies by 10 million barrels per day. Now, this is in a move that's meant to protect the economic interest of members, as well as provide a buffer against the effects of the coronavirus pandemic. But President Donald Trump of the United States, who has claimed credit for birthing the deal, says the supply cut is closer to the 20 million barrels mark. For what all of this could mean for Nigeria under her current economic circumstances and, by extension, the rest of the world as well, we're now being joined by Bismarck Rewane, an economic policy analyst and also the Chief Executive Officer of Financial Derivatives Ltd. He's also a member of the Presidential Economic Advisory Council. However, we'll be teasing up that conversation by showing you a report that's been put together by our very own Adefemi Akinsanya on the effect of the ongoing lockdown on businesses. Join us after now.
The COVID-19 pandemic has had an effect on many areas of life. People are scrambling to adjust and businesses aren't any different. We've come out onto the streets to find out just how businesses are coping with life under lockdown. We started at the Lagos offices of Excel Africa, a multi-service delivery firm including cash management, energy support and logistics. With operations across West Africa and the United States and clients including GT Bank, Shell and Ericsson, Executive Chairman Charles Wado Jr. says the company is committed to keeping their business going.
We are compelled to continue to provide services to our clients according to already contracted terms and conditions. So this is imposing a great deal of pressure on our resources, as well as on even the health and well-being of our personnel across the various sectors that we operate in. And we started the year quite well, but what we see a reduction, in a minimum of 40% reduction in our bucket revenue across all our businesses.
A spark of light in an otherwise dull time for business activity is Konga. The e-commerce firm has more than 500,000 products for sale online and more than 30 stores across 14 states in Nigeria. Co-founder Nnamdi Ike says Konga is weathering the storm COVID-19 has brought to business.
Our business has been able to scale through to some extent because we're listed as an essential service. So we're able to deliver at least in some key states across Nigeria. We're still having some issues in some states here and there, but we're still working with state governments to make sure that we have access to those locations. But today, Konga is able to deliver in almost every state across Nigeria today. I don't think we would like to say that we'll be able to capitalize off such a negative issue, but definitely we've seen increased traction coming into our platform because a lot of people are stuck at home. I'll give you an example. An ex-governor had an interview with Arise TV, funny enough, sometime last week. So he called me directly. He's like, I need a laptop, or the laptop I have is not working, and I have an online interview. So he called me, and we were able to supply him the laptop. So a lot of people have needs during this period, but they can't find this product. Somebody called me that they have huge amount of food in their freezer, and the food is about to spoil. There's no shop that's open right now. So we have to find a way to quickly deliver him a freezer. Same thing goes for essential foods. Same thing goes for things like face masks and safety products. We're able to, because we have access to be able to deliver during this period, we're able to deliver these products to the end users. So we've seen increased traction online, and we hope that after this all dies out, people will begin to embrace the online shopping model in Nigeria.
And that brings us to Toasties. Found on Awolowo Road, the casual sandwich spot is a favorite among corporates in the Ikoyi area. But with offices closed and a strict temporary policy against allowing customers in the store, the business has been relying on collections and deliveries. Owner Eka Obaegbana says she's had to amend her business model to keep her staff safe and still support her bottom line.
You know, normally people can come in here, wait in for their food, even eat in the restaurants, but we had to close dining in the restaurant completely, obviously to respect and follow the regulations from NCDC. So now customers come to the door and they have to make use of our hand sanitizer. We have to check temperatures. We prefer actually that customers stay in their vehicles so we can bring the food out to customers. It's allowed us to, I guess, focus on other areas of the business, like really trying to drive our delivery. And obviously when things are back up, hopefully that area will be a lot stronger. You know, it's actually allowed us time to develop new recipes and everything so that once everything's back up and running, we should be able to like launch some new interesting things. I'm hopeful that things will be back to where they were, if not better. So let's see what happens.
And for many, that's the hallmark of business life in Lagos, striving despite the struggle. Adefemi Akinsanya, Arise News, Lagos.
Well, brilliant report there by Adefemi Akinsanya as usual. So we applaud our efforts, excellent effort. Mr. Rewane, are you still with us?
Good morning,
coming
sir.
back to you right away. And I'm sure you watched that report by Adefemi Akinsanya. And there was a reflection of the impact of COVID-19 on businesses in Nigeria. In the speech by the president yesterday, in fact, he directed that the Presidential Economic Advisory Council, of which you are a member, and the Economic Sustainability Committee should work out a policy framework for supporting the economy within the context of COVID-19, now and even after. But the bigger fear is that with medium and small-scale enterprises virtually collapsing in the face of disappearing demand and the fear of financial crisis, do you think that with oil prices going down and the crisis we're witnessing in the economy, that these two headwinds would automatically lead to a recession? And if that is the case, what should Nigeria do? What kind of preparations should we be making?
Good morning, Ruben.
Good morning.
The reality is that nobody can avoid this recession. Everybody in the world. It's going to be a global recession, but the impact is going to be more in certain countries because of the lack of buffers, one. Two is the fact that a lot of countries did not learn the lessons from the past recessions. So let's step back and, first of all, let's dimension this crisis. The point is that this, oil prices have come back to haunt Nigeria, not necessarily because of its dependency on oil revenues, but also because it lacks buffers, and also because the planning process and the framework, as you rightly said, was not there to anticipate the impact of exogenous shocks on the country. Having said that, and it served no purpose for us to start saying the government should have done this, the corporates should have done that and others. It's how do we deal with the current crisis and what is the extent and dimension of this crisis. To understand this, you must actually situate the crisis in three dimensions. One is the healthcare dimension, which is the COVID-19 crisis. Two is the trade dimension, trade and aid. Global trade is going to shrink by at least 80%. Then finally, the oil markets and the impact of the oil markets on our economy. Having said that, you must understand that the world is in what we can call a medically induced coma. The coma is to contract economic activity, create a false paralysis of economic activity to allow us contain the COVID-19 crisis. The COVID-19 crisis has two dimensions. Globally, you seldom have a supply shock and a demand shock happening simultaneously. But this time, we had a supply shock because China is the powerhouse of the world, it's the largest exporter, and because China shut down, there was a supply shock. Automatically, because people were confined to their homes and social distancing, there was also a demand shock. When you have these two coming together, then you have a magnitude, an exponential growth in the recession or the negative impact. That is what has happened. Now, coming back to Nigeria, the reality is that Nigeria is what we call a natural wealth economy, not a produce wealth economy. I listened to Mr. Akinsanya talking about, and everybody he talked to, from Konga to GT to the other guys, all of them were talking about how to trade products that were not necessarily manufactured in this country. So you have a trading dependent, a natural wealth economy where oil revenues are brought in and we use that to import goods or import spare parts and raw materials to sell into the market. Now, this is an opportunity, and I think the federal government of Nigeria is fully aware of this. Nobody's deceiving themselves about that. That is a time to press the reset button. And what do I mean by this? I mean that it's time to alter the levers of control of this economy to ensure that it uses opportunity to deal with the rent-seeking, crony capitalist structure that exists and allow for an economy that will respond to market forces and therefore unlock the investment potential, the entrepreneurial instinct in Nigeria, and unleash growth, rapid growth, but bring this economy to its full potential, which is probably over $1.5 trillion. Right now, our GDP is about $400 billion.
Thank you for your analysis on that, Mr. Rewane. Now, you started off talking about three dimensions: the healthcare dimension, the trade dimension, and then, of course, the oil markets dimension, of which we're seeing both supply and demand shocks. This is what, of course, has led to the historic agreement that we saw yesterday reached by OPEC+. And I'd like to come into conversation with you on that, because, first of all, do you think OPEC Plus are out of the woods now with this agreement reached? And are you expecting 100% compliance, or is compliance under threat? An article by The Economist spoke about the fact that in the past, countries like Russia, Iran, and Nigeria have failed to comply with past agreements on output. What is your take on this?
First of all, I'll have to refer you to a comment by Zbigniew Brzezinski in the past, what we call MAD. That is mutually assured destruction. If anybody does not comply, the entire oil markets as we know it today and the oil industry, which is an oligopoly, will collapse. And if anybody thinks they can go alone, trying to be a price leader, i.e. Russia, the United States, or Mexico, then you will have what we call solitary assured destruction. Now, having said that, let's ask ourselves, over the past 20, 30 years, we've seen two things happening simultaneously. One, the growing obsolescence of oil because of solar energy, alternative fossil fuels, and others. And secondly, we are beginning to see the growing irrelevance of OPEC. So, having said that, we have come to that recognition. Now, one, Nigeria and all the perpetual cheats in this particular industry will have to comply. You heard the Nigerian minister saying we have to comply. We're going to cut back 400,000 barrels. Secondly, the fact is that we have to prop up and maintain what we call a fair price. Because today, at $30 a barrel, even shale is not how would I put it? Shale is not investment positive. Nigeria's marginal cost at times is higher than 32 in the deep water. So there's what we call the break-even point, break-even price of production, and that's roughly at about $30 or $28 a barrel. I know that Saudi Arabia has a cost of $3, and some other countries have a cost of $7. But having said that, all producers are going to now rein in their cost and to become competitive. Now, let's look at the impact of this on Nigeria. Nigeria's benchmark price in the supplementary budget is $30 a barrel. Nigeria's production target was 1.9 million barrels. The Minister of Finance announced it, bringing it down to 1.7, and I think that we are even going to go down to 1.5. If you put all of this together, you find that you have a fiscal shock of about 40 to 45% of your revenues. The fiscal shock is one thing, but having said that, because oil is responsible for 75% and LNG another 15% of our export revenues, you will have what they call a balance of trade negative figure. We've not had a balance of trade negative figure in the past 15 years.
Mr. Rewane?
Yes?
Mr. Rewane?
Yes, I can hear you.
Sorry to interrupt you. We need to take a short commercial break. When we return, the conversation will continue. Please stay with us. Welcome back to the morning show here on the Arise News channel. Still with us in our Lagos studio is Bismarck Rewane, CEO, Financial Derivatives, and member of the Presidential Economic Advisory Council. Mr. Rewane, thank you very much for staying with us. Before we went on that commercial break, you were talking about the implications of the spot price of oil being $30 for Nigeria and the challenges that Nigeria may have to deal with. If you may just continue with that before we take another question.
Thank you, Ruben. I think we're talking about the impact of the OPEC agreement and the drop in the price on the Nigerian economy. And I try to see this from 5 dimensions. First dimension is the dimension of external imbalances. Because we depend on oil and LNG for our export earnings, it creates a foreign exchange scarcity and shortage, which leads to external imbalances, as I discussed. Secondly, it creates a fiscal shock because our fiscal revenues depend on oil and corporate income taxes and petroleum profit taxes. Our corporate earnings and government spending is going to drop by at least 40 to 45%. I want you to imagine that if in December, what we shared in FAC was 720 billion naira, I want you to imagine that in May, you might be looking at a situation where what is going to be shared by federal and state governments will drop to as low as 320 billion naira. I want you to imagine the impact of this. That is the fiscal level of fiscal shock. What have we done? We have gone, rightfully so, to the multilateral agencies to seek for $6.9 billion of that which is due to countries that are in this situation. Many countries have got it, Ghana, Iran, and others. So we are hoping we get that. But even if we get all of it, there will still be a gap required. And that gap has to be financed from domestic sources, including securitization of debt and restructuring of our existing debt. That's the second dimension. So there's the external imbalance, there's the fiscal gap, there's thirdly, and more importantly, there's the fact that there's a deterioration in our terms of trade. The deterioration in your terms of trade fits into the external imbalance, followed by a balance of trade negative figure. And finally, it leads to compression of economic activity across the entire economy. So it's not a pleasant picture, but the beauty is that it's not Nigeria alone, and this is an opportunity for Nigeria to press the reset button, as I said earlier, and fix the structural problems as well as the operational problems that come with this crisis.
Well, let's go back to OPEC. Many commentators have said what OPEC has done is too little, too late, and that it may not address the demand and supply shock that we have in the global oil market. But what do you think? Do you think that the OPEC agreement on Sunday will rescue the oil industry, the global oil industry?
Well, like I say, it's always better late than never. Coming to terms with your own growing irrelevance and coming to terms with the obsolescence of the product which you are selling is the mental adjustment that is required. And typically in this kind of circumstances, the mental adjustment is more difficult than the fiscal adjustment. So we've come to terms with that reality. Coming back to Nigeria, the point is that one, as an oil-producing country, we thought we were rich. We were not rich. But even though we had a wealth illusion, the point is that Nigeria can be classified as one of those countries which were former rich, what we call the former rich men. You know, those stories about my grandfather was a very rich man, but now I'm a pauper. That's where we are. So our buffers have thinned out. Our wealth has dissipated. And now this is the time for the heavy lifting. And thank God we now, as a country, both the leadership and the followership have come to terms with the fact that our situation is not that pleasant. But the beauty is that we have the resources, we have the energy, we have what we can call the population, and our median age is 18.9. So technically speaking, we should have the capacity to actually do what happened in China 20, 30 years ago.
Well, certainly you're right. Our situation isn't great. Right now, we've been downgraded by 3 major agencies. We've also abandoned plans to raise a $3.3 billion Eurobond. And it's quite interesting to see here, sir, because we've also expressed unwillingness for the IMF, for an IMF bailout. So if one wants to look forward and say, okay, what other borrowing options do we have? What is the way forward for Nigeria? What is the best advice that you can give?
First and foremost, I don't think we abandoned the bailout IMF. All we said, we are not going for a structural adjustment program. The IMF has a series of programs. We're not going for the structural adjustment program. We're not going for the policy support instrument program. But we are going to avail of the stimulus package that are offered to all the countries, including those who don't even have a program. Even Iran has gone there. So concessionary lending at 1% with a 3-year moratorium and a 5-year payback period is infinitely, it's like equity, is infinitely better than borrowing from the Eurobond market, where the rates are Shylock and cutthroat. So I think that's one. But you can't borrow your way out of this. You need investments. To get investments, you need to encourage and motivate investors to part with their money which they are saving or money they would have put in other markets to come to your market. So you've got to be competitive, you've got to be attractive, and returns have to be lucrative. We had always felt that whether we liked it or not, whether investors like it or not, they had to come here. The truth is now that we now know what I call the 6th stage of grief. You know, there are 5 stages of grief. We now call the 6th stage of grief, where we have come to terms with the reality that we are not the invisible bride. We have to now work. We have to actually live. We've got to go onto the what you call the catwalk. You guys on Arise do the what do you call it, the Arise beauty and pageant. We have to go on the catwalk. You've got to show what you have to attract suitors to come in and put their money where their mouth is. That's important at this point in time.
Well, there are some people, let's go back to OPEC. There are some people who think that OPEC has become irrelevant and that relevance is under threat. I don't know what you think, but there are also some people who say Nigeria should pull out of OPEC. I mean, in the last few weeks, since March, thereabouts, we saw the conflict between Russia and Saudi Arabia. At the end of the day, it was the United States that was part of that diplomatic tussle between those two oil giants that eventually helped to resolve the crisis. Has OPEC outlived its relevance?
Well, you see, in economics, we have what we call market transition. The worst form of the imperfect market is called a monopoly, where you have one seller and many buyers. You exploit the market to a point, to a fullest point. But after exploitation, a few more people will come in. Maybe one person, then you have a duopoly. Then after that, a few others come in, you have an oligopoly. And an oligopoly transitions into imperfect competition before you get to perfect competition. What is happening to OPEC now? 2 things. One is the fact that it's transitioning from an oligopoly to an imperfect competition. But more important is the fact that the oil itself as an asset, just like coal was 150 years ago. The people went to war over coal. In the war in Alsace and Lorraine, the battles in the Ruhr Valley, all of that was about coal. Coal was the source of energy. Oil became the source of energy. Now we are going towards atomic energy. We are going to alternative energy. And therefore, that asset, which was a scarce resource, is now becoming not so scarce. And the diminishing laws of marginal utility are beginning to kick in. And that is what's happening. We are now holding an asset which is not as valuable as it used to be 40, 50 years ago. And the reality is that if we are now addicted to the revenue from that, we have to come to terms with our new reality. OPEC, non-OPEC, Nigeria, whether you join OPEC or skip OPEC, the truth is that you're having an asset whose aggregate demand is beginning to fall, and there's a supply gap. Now, what it means is that you've got to look for alternative sources. It's more than rhetoric, because we've been talking about diversifying. The surest way to diversify is to adjust your currency in a manner that imports become less attractive and exports become more attractive, because your exports become cheaper in international currency terms. That is being worked on at this point in time. I know that a mechanism for dealing with our currency misalignment is being developed by the Central Bank of Nigeria and the economic policy makers in the country. And you will see that unfold as time goes on, and all to the betterment of Nigeria.
Certainly to the betterment of Nigeria. Now, I'd also like to get your opinion on something. 2 tweets, actually, that were put out yesterday after the Director General of the WHO, Dr. Tedros Ghebreyesus, gave his media briefing. Now, the first tweet is as follows. He said, while COVID-19 accelerates very fast, it decelerates much more slowly. This is especially concerning for countries with large poor populations, where stay-at-home orders and other restrictions used in some high-income countries may not be practical. His second tweet, or his follow-up tweet from that, sir, was, many poor people, migrants and refugees, live in overcrowded conditions with few resources and little access to healthcare. Physical distancing is very difficult in such situations, so other public health measures must be put in place and extended for the most vulnerable. So if I was to pose the question to you, sir, which way Nigeria, what would you say?
Well, it's interesting because what we tried to do at our firm was to look at what we call the standard correlation between independent and dependent variables. The independent variable being fatalities due to COVID and infection, while the dependent variables, right, median age, life expectancy, and also temperature and humidity. When we did that, we tried to forecast, and we saw a standard correlation of about 0.70 when it came to life expectancy. In other words, the countries with the highest life expectancy, Italy, Germany, and the United States, had the highest level of fatalities. Why? Because people at that age bracket are more likely to have pre-existing conditions or would have succumbed to diabetes, hypertension, ulcer, and obesity and all of that. So that makes them vulnerable. Second was median age. The median age in Nigeria is 18.9. The median age in Africa is about 31. And the median age in the rest of the world is about 40. In all of Africa, there are 1.2 billion people, of which only 50 million are above the age of 60. Just think about it. 1.2 billion people in Africa and only 50 million, less than 0.5%, are above the age of 60, which means that the other guys are lower in age, have less pre-existing conditions, and also have the what you call the immune system that can withstand these shocks. So having said that, the question of poverty, congestion, and urban pollution makes them also vulnerable. That is not to say that the young people cannot get COVID-19. It doesn't mean that the young people will not die.
Thank you very much, sir.
Well, thank you very much,
Thank you.
Mr. Bismarck Rewane. That's where we'll draw the curtain on this conversation this morning.